Good evening, everyone. Time for another silver update. This is the 1 hour chart of silver provided by netdania.com. You can click on the link below. Now we've got this very important trend line here. You can see that the touch points and virtual touch points are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, nearly 10. And you can see we're coming up upon the line again. It's going to be an interesting overnight session because there's going to be a chance for Asia to move us through that line. A move you can see here just to the 28.75 will actually give us a decent break through it. You can see there have been fake outs. There was one here and there was close to one there. But if we get a decisive move, the number that I've been keying on so far is 29. And of course, as the market continues down or even goes sideways, the trend line falls. If the market goes sideways, it'll break through. So the number that it takes to break through is lower and lower as we move along in time. 29 clearly at this point would be a decisive breakthrough of this downtrend line. After this downtrend line is broken, then we're looking for these key support lines which become resistance lines on the way back up. So this line here and this line here, these are going to be two of the key resistance lines as we're coming back up, and we need to get through that on the way back. So that's very important to watch that trend line. The other thing that is really important is this volume that we've seen down here. Now this fourth or even fifth perhaps day of extreme volume, you can see the trend in extreme volume. It fell off today, but a very, very serious volume trend. And this day may be the biggest day of all. And what was interesting was we got that spike down to 28 and a spike down, spike back up. Now that's going to be a fairly large candlestick when we go to a different view. But I wanted to take you to the 30-minute view to take you a little bit closer up to show you how consistent that line is and how we're coming to that. So this is going to be a very interesting time. I don't think they can push it much lower. Of course, I'm often wrong and can be wrong. I'm just guessing at what's in store for the paper price. So I wanted to show you real quick the Apple chart, and had a lot of people ask me about that recently, and some people have asked me whether it's time to go long. Now, you know the saying that it's dangerous to catch a falling knife. Normally you want to pick a knife up off the floor. Is this the floor? It could be. So if you look at some of the other stocks, we're going to look at Netflix in a second here just to get a comparison. That could be the floor. But then again, I guess like a sinkhole, maybe there's times that the knife just goes right through the floor. And of course, the next one is all the way down here at 200. And we'll see when we get to the main story of the night how when these things break, they're broken and done when we look at Jesse Livermore. But I wanted to do an overlay here real quick of the Netflix chart to give you a comparison, so that that's something we're going to look at when we look at Jesse Livermore and when we talk about the end of bull markets. Now you can see here, this is the overlay, so it's not a strict historical comparison, it's rather a percentage comparison, but just to give you the percentage comparisons is very important. You can see, and if you remember, I've covered that Netflix has had a massive bounce. What's fascinating about this is they're actually now at the exact same price relatively, but you can see Netflix did its bounce actually starting in 2011, and it ran all the way from about 300 all the way down to about 62 bucks. So the equivalent in Apple would be a run down to about 100 bucks. And with Apple still at around 400, That leaves a lot of downside. People who like to play the options, they might get a quick bounce, but I remember specifically playing the Netflix for a bounce. Now with my paper account, again, I don't recommend that anybody do this. I'm just telling you what I've done with my paper account. I played the Netflix game for a bit, and I caught some bounces, I got some downdrafts, but you can see here that the downdraft in Netflix was pretty much a straight downfall, and there weren't too many bounces. It wasn't until this bounce and a failure and then this massive bounce. So we'll look at that when we get over to Jesse Livermore, but let's take some questions of the night, and we'll start off with this one from Slarty Bartfast. Hijacking retirement funds. Hi, Brother John. I see this talk of seizing retirement accounts by forcing them into treasuries on and off year after year. Isn't it just silly? The 401k, pension / IRA, etc. funds that exist today are all invested in stocks, bonds, and other Wall Street managed money vehicles. In fact, I've always felt the entire reason the 401k was invented was to provide a huge steady cash flow to the phony baloney stock market. Anyone sucker enough to buy into it will someday find out that it was all a scam from the start. First, Wall Street and the corporate money that has those funds today would never allow it to be taken from them. Second, putting it into treasuries would be no different, just moving it from one paper Ponzi scheme to another, both of which are owned by the same overlords, a zero-sum game for the powers that be. Well, I don't strictly agree with that. The big difference in my mind is going to be, I do agree with the overall sentiment that, as others have quipped before, that the stock market is about transferring money from Main Street to Wall Street. And I've covered in the past the stock options written by CEOs and how they loot their own companies and basically loot your retirement funds. And it is a big, big scam where they transfer money from Main Street to Wall Street. But the big difference between stocks and bonds is going to be who's looting the money. Now, with stocks and also commodities, but primarily stocks, and I've mentioned before I was a stock broker as well as a commodities broker. There's a term in those industries called churn 'em and burn 'em, and basically what that means is that as a broker, it's not in your interest to make a lot of money for your client. That's something that hedge fund people do. It's in your interest to churn and burn your accounts. In other words, to generate as much commission by trading the account as you possibly can. So when you're talking about the stock market, you're talking about Wall Street churning and burning up the accounts and paying themselves very large commissions for doing so. On the other hand, when you're talking about treasuries, you're just talking about the government pretty much sucking up all those monies, using them to pay off the money that they've already stolen. If you remember with Bernanke and his testimony, he was the one I covered where he was questioned by Bachman, and she asked him about the debt, and then he talked about, well, the debt's not really 16 trillion. That's not counting the that's adding to the intergovernmental borrowings, and talked about the Social Security slush fund. But of course that money, there's no fund. It's already gone. It's already been spent. So when you're talking about treasuries, you're not talking about Wall Street churning and burning up a bunch of commissions. You're talking about the government taking the money and spending it just like they've done with Social Security. So that's going to be the big difference for me. Now, as far as the 401ks, I've predicted, and that's going to also be in the theme tonight, that they really aren't going to have political cover, in my opinion, for taking those funds or changing the rules on those funds. They won't have the political will to do that until the market crashes. That's one of the reasons, among many reasons, that I'm bearish on the stock market, because I believe that ultimately they are going to grab those funds, but it's going to be very difficult for them to make the argument. Now, if we get a return to S&P 666, then perhaps they will be able to make that argument that people simply can't be trusted to manage their own retirement. It would be better off to have the government guarantee them a set percentage year after year after year. So before they make that argument, they're going to have to take stocks way, way down from here. And next question is from row 66. What is the difference between proof and MS70? What is the difference between a proof and MS70? I understand bullion coins, some premium charged for mint stamped ones and certain collectible rounds, but I see some folks on here recommend buying only proofs. Also, what is the deal with the early release coins? Does that make them more desirable? The question arose when looking on eBay and folks advertising coins as proof-like. Okay, so that's a pretty complex question, and I'm just going to take you over to APMEX to try to give you an explanation. Now, this is a proof coin here. We're going to look at the Snake series. This is the Lunar Series 2 out of Perth Mint, and you can see here, if you just do a quick glance, you might not be able to see it on the video here. I'll click on the image there. That's the proof snake, and that's the uncirculated snake. So you can see the difference. The proof is actually a specially die-struck coin. It's a coin that has a polished die. They're made for collectors, and so these are much, much higher quality. There's only a certain number here with its 5,000. You can see the price on the proof is all the way up here at $229 for a 1 ounce snake, whereas you can see the regular 1 ounce snake is $44.68. So a very, very significant premium for the proof coin. Now, I have never purchased any of the proof silver. I'm not interested in collecting numismatic coins, regardless of whether they're silver, copper, gold. I'm interested in stacking bullion and potentially getting a bonus by paying maybe $1 above regular bullion of potential collectors. Now, that brings us to the idea of grading coins. Now, that's a whole different thing for uncirculated coins versus proofs. You have this grading system for uncirculated coins. You have to remember that that comes from the days when coins were actually circulated as money. So that's how these grading systems developed. And if you're a coin collector, you know it goes all the way from poor to fair to good to very good to fine, very fine, extra fine, and then semi-uncirculated, uncirculated. And once you're in uncirculated, you have MS60 to MS70. Now, the uncirculated coins are coins that have never been circulated. In other words, theoretically, they've never been touched by a human hand. So the idea is that you're looking for the best example of that coin in uncirculated form. Now, that's not like the proof, because the proof wasn't designed for circulation. And again, that's a misnomer now, because neither are the Eagles or the Maples designed for circulation. Nevertheless, in the production process, the uncirculated coins, as you know, they come in tubes, they're stacked, they come off of a roller. There's a lot of things that happen where they can get various marks on them. So that's where you get the grading services come in and grade those coins for the uncirculated grade that runs between MS60 and MS70. And the MS70 coin is an absolutely perfect coin. So you can see here on the 2013 Lunar Year of the Snake coin out of Perth Mint, they're $99.99 for the 1 ounce. And you can see the regular 1 ounce is 44.68. So about double, a little bit more than double the price. This is the exact same coin. This coin was not treated any differently. So you could go and buy, there's only 173 left of these, but let's say you went and bought 100 of these coins and you got them for 44.68 a coin. You could take those coins and you could go to the two main grading services. There's PCGS and there's NGC. These are coin grading services that basically analyze the coin, and they're looking at how many marks are on the coin, how perfect the strike of the coin is. You have to remember that with the proof coins, they can be struck multiple times to get the perfect strike, whereas the uncirculateds normally only struck once or twice, normally only once. So these coin grading services are looking for those perfect coins, and you'll see on eBay MS68, MS69, MS70. Now, the interesting thing about the Perth Mint, and the reason why I like them, is unlike the Silver Eagle and unlike the Canadian Maple and unlike every other coin, all of the Perth Mint coins come in these rolls of plastic sealed coins. Now, I don't know if in the production process at some point the coins clang against each other, but I do know that they don't have that later problem of you pulling them out of the tube and having them nick each other, etc. So it's much more likely you're going to get an MS70. And so it's quite possible that if you bought 100 of these 1 ounce Australian lunar snake coins, that you could take them to the NGC or the PCGS, have them graded, and a percentage of those, and I have no idea what that would be MS70. Another percentage would be MS69, 68, etc. Now, what's the cost of the grading services? Well, it depends on how many coins you have graded. I imagine that you bought maybe 1,000 of these, which aren't available right now, but let's say you bought 1,000 of these and you called up NGC or PCGS and said, hey, I need 1,000 coins graded. You might be able to get a deal. They might grade 1,000 coins for you for maybe $10 a coin. I don't know. But if it turns out that you could get that deal, then yes, you could buy your snakes for less than $50. You could send 1,000 in to them, and depending on how many were MS70, you could sell those for 99, maybe your 69s for 89. So that's not something that I do. The only time I ever look at these graded coins is the rare anomalous situation, and you do have those where these graded coins are in oversupply and they actually are nearly equal or less to the price of bullion, and then I'm willing to pick up those coins. And again, that's in a rare situation. So that's the difference between proof coins and uncirculated coins. Both of them can run from MS60 to MS70, but a proof coin is a coin that is struck with a special die and normally will be struck a number of times to get that perfect strike. And often, to answer the last part of his question, often the proof coins are some of the first strikes of that die, so they get the most defined strike. So let's get over to the main question of the night, and that's going to have to do with the stock market. Now, as I pointed out, I'm beginning to, in my little tiny paper trading account that I like to trade for fun, I'm beginning to rotate into short positions on various stocks. And that's just something I like to do because it keeps me informed about the stock market. I certainly don't have really any money to speak of in that account. But I wanted to cover the grandfather of all trading, and that's Jesse Livermore, Reminiscences of a Stock Operator. And this is the summary in the book from page 141 of how you trade and begin to determine that a bear market is coming. And I just wanted to read this to you, and we're going to talk about Apple and Netflix and others a little bit. So let's read this. And there is another thing to remember, and that is that a market does not culminate in one grand blaze of glory. Neither does it end with a sudden reversal of form. A market can and does often cease to be a bull market long before prices generally begin to break. My long expected warning came to me when I noticed that one after another, those stocks which had been the leaders of the market reacted several points from the top, and for the first time in many months did not come back. Their race evidently was run, and that clearly necessitated a change in my trading tactics. It was simple enough. In a bull market, the trend of prices, of course, is decidedly and definitely upward. Therefore, whenever a stock goes against the general trend, you are justified in assuming that there's something wrong with that particular stock. It is enough for the experienced trader to perceive that something is wrong. He must not expect the tape to become a lecturer. His job is to listen for it to say, "Get out," and not wait for it to submit a legal brief for approval. As I said before, I noticed that stocks which had been the leaders of the wonderful advance had ceased to advance. They dropped 6 or 7 points and stayed there. At the same time, the rest of the market kept on advancing under new standard bearers. Since nothing wrong had developed with the companies themselves, the reason had to be sought elsewhere. Those stocks had gone with the current for months. When they ceased to do so, though the bull tide was still running strong, it meant that for those particular stocks, the bull market was over. For the rest of the list, the tendency was still decidedly upward. There was no need to be perplexed into inactivity, for there were really no cross currents. I did not turn bearish on the market then, because the tape didn't tell me to do so. The end of the bull market had not come, though it was within hailing distance. Pending its arrival, there were still bull money to be made. Such being the case, I merely turned bearish on the stocks which had stopped advancing, and as to the rest of the market had rising power behind it, I both bought and sold. The leaders that had ceased to lead, I sold. I put out a short line of 5,000 shares in each of them, and then I went long of the new leaders. The stocks I was short of didn't do much, but my long stocks kept rising. When finally these in turn ceased to advance, I sold them out and went short 5,000 shares of each. By this time, I was more bearish than bullish, because obviously the next big money was going to be made on the downside. While I felt certain that the bear market had really begun before the bull market had really ended, I knew the time for being a rampant bear was not yet. There was no sense in being more royalist than the king, especially in being so too soon. The tape merely said that patrolling parties from the main bear army had dashed by. Time to get ready. I kept on both buying and selling until after about a month's trading I had out a short line of 60,000 shares, 5,000 shares of each in a dozen different stocks, which earlier in the year had been the public's favorites because they had been the leaders of the great bull market. It was not a very heavy line, but don't forget that neither was the market definitely bearish. Then one day the entire market became quite weak and prices of all stocks began to fall. When I had a profit of at least 4 points in each and every one of the 12 stocks I was short of, I knew I was right. The tape told me it was now safe to be bearish, so I promptly doubled up. I had my position. I was short of stocks in a market that was now plainly a bear market. There wasn't any need for me to push things along. The market was bound to go my way, and knowing that, I could afford to wait. After I doubled up, I didn't make another trade for a long time. About 7 weeks after I put out my full line, we had the famous leak, and stocks broke badly. It was said that somebody had advanced news from Washington that President Wilson was going to issue a message that would bring back the dove of peace to Europe in a hurry. Of course, the war bride boom was started and kept up by the World War, and peace was a bare item. When one of the cleverest traders on the floor was accused of profiting by advance information, he simply said he had sold stocks not on any news, but because he considered that the bull market was overripe. I myself had doubled my line of shorts 7 weeks before. So there's the explanation from Jesse Livermore. Now you can see that we're starting to see that in the stock market. Now, the movement in Netflix is very unnerving, to say the least. We had that tremendous breakdown sell-off of that stock, and then looks like a 2/3 rally. But Apple, of course, is now the next of the bull leaders that has fallen off, and fallen off hard. It's still falling. There may be a bounce, but this leader seems to have fallen and not risen. Now, the next stock I'm watching very closely, and I've been trading this stock long and short, is Priceline. And there's a number of these. So we're starting to see what Jesse Livermore described. I'm not saying that it's the same this time, because there's much more manipulation today than there was in his day. In his day, the manipulators were pool operators and insiders. Today, the manipulators are central banks, government agencies, and pension funds. So the manipulation today is different. Nevertheless, the pattern is starting to follow the same line, and we're starting to see the leaders fall off and then new leaders come. So it appears that the bear market is starting to form in stocks. I'm not going to say it's here, but it appears to be forming, and so I'm just playing with it on my paper account. Of course, the main account and the main interest is going to be silver. That's going to be a real investment as opposed to a paper investment. That's strictly stacking physical silver. And again, we're watching this line very carefully, because this is the major downtrend line, and we very well could get that test tonight. You can see we've broken through very slightly, but again, we've broken through before and failed. So we'll be watching that line tonight and tomorrow to see if we can break through for good and take out that 29 and 29.50 price. And we'll talk to you next time.